Hi, everyone. Yeah, a happy surprise for you, Ryan. Great call. Like notes
Yeah,
from
thanks, mate.
yeah. What did they say that the market wasn't prepared for? You were the only one prepared for it.
I wouldn't say I was prepared for it. It was always going to be a real small risk, but we always got to keep in mind the risks, however small, because they bring the biggest moves. Yeah, they moved their yield curve control band to half a point either side, plus minus from 25 pips.
Okay. When you
Yeah.
have windfalls like this, you take something off?
Yep. Yep. As soon as I opened my eyes and looked at my screen in bed, it was like, yep, take some money off.
Okay.
I wish I would
you
have
hold a
opened my
piece.
eyes when you opened your eyes.
You only what?
I wish I would have opened my eyes when you opened your eyes. Because I happened to be in front of I was sitting there watching, getting caught up with a show with my wife, just kind of enjoying the evening because we were finished doing some holiday stuff, and then all of a sudden I can hear out of my office all the alarms going off. I look at my phone, things are triggering all over the place. I from ForexAnalytix alerts, and I run over to my office and I got trigger happy and pulled my profits. And if I would have just sat around for another,
Watch the end of the show.
Well, just maybe another 20 minutes, it would have been, even better. But Kman was awake. So he was there too. But it was a lot of us in the chat room were, we're long yen. So we were short dollar yen pretty aggressively, which is good. You don't expect, I did not expect that move overnight. We were thinking, Ryan, this is going to be a when Kuroda was gone type of thing. I mean, this is like, we got fast forward 3 months.
Yeah, it's easy to look at things in the cold light of day and go over it, and we were stressing quite strongly on the flow show. It's a big move in terms of the Bank of Japan because they've done nothing for forever. But in the bigger context, is it a big move? They've just let some pressure off the bond market and the stresses that they themselves have said have been building there. And they were Kuroda was very at pains to message, we're still easing, we're not changing policy, this isn't a rate hike, keeping the message, they don't expect inflation to rise, all the same lines that we've heard, trying to keep the market keeping its feet on the ground. That's not going to happen. The market already, you read the bank research notes, this is the start of the beginning of the end and that sort of thing. But it's important to know the context. They haven't done anything with monetary policy significantly. So it's still a bit of an open book, but the market's going to do what the market's going to do, isn't it?
Yeah, and sorry, Dale, I didn't mean to jump on in here. It was a really, really very, very wild evening. And
look at where it's what it's tagging right here.
Is that the 200 week?
50 week.
Oh, it's a 50 week moving average. Okay. Interesting.
200's all the way down here.
Yeah. Okay. We're also just below an 88% retracement. Here's let me
grab the screen, bro.
I take it real quick. And we can go over some other things that you want to discuss. I want to show everybody because if you guys are not in the ForexAnalytix community, this is where it kind of matters. Well, it always matters, but I want you guys to take a look. Yeah, when you have the 10-year is rolling over, and everybody was just barking yesterday about the move in yields, and you had the sell off in the 10-year, but we're coming out of an ascending wedge. So just understand that is it was a bearish development yesterday, and it's a more bearish development today. So this is not a surprise to us at all. If you look at the ForexAnalytix analysis, you can just go. Let me find the 10-year here, which we cover 30 instruments here, so you can see it's black on the basic technical analysis. That means it's or black. I mean red. Red. We use red and black synonymously, just because it's a black candles like black and white the way it used to be, old school. Anyway, that was coming out of an ascending wedge. So we already knew that it was rolling over. So when you got the 10-year rolling over like this, and that means yields are going higher, one of the biggest yield correlations have been the dollar yen. So Ryan, you just said it, you know, and you were just talking about it, you know, the dollar yen, significant sell-off. I mean, we were bearish. Let me just show you guys why we were bearish the dollar yen, just so you guys have a good understanding of it. When you take bounces and retracements, when things are shallow, like let me remove this and then I'm going to put it back on. So before today or yesterday or whatever, okay, if you guys didn't notice this pink line, that was at the 24% retracement. We couldn't even get past the 24% retracement. We were just skating across the 200-day moving average. We all knew, and we talked about it every damn day here on the ForexAnalytix shows, the private shows that we do. We're like, okay, if it gets above 138, that's automatically bullish, because that's going to take us right to 140. Period. End of story. Like, there's no, it's just a breakout. But because we couldn't get over the 24% retracement, it was a very good risk reward short. So, you know, if you go into the, you know, trades room, you'll notice Kman was short. Ryan, you know, he just got out of some of his dollar yen shorts. And you can see all the dollar yen trading that Kman and I were doing last night. So you can see I was short at 136.94 average, and I got out last night at 134.52, and I took 240 pips off. You know, that was my open positions going into last night. So, you know, we talk about what we're doing in the markets all the time, and I'm telling you right now that you know, we sold off pretty aggressively. This is a big move. I mean, to have a 3% move, and I know, you know, you take into what Ryan just said, the BOJ hasn't done anything in forever. But when yields are rallying, we might see some continued dollar strength. It'll probably be limited continued dollar strength against the dollar yen, but you have to be a little bit careful. If you're short after a 3% move, this is where the dollar yen could bounce back to like 133.5, something like that. But if you look at all these other yen pairs, they have been absolutely destroyed. And the problem is, and I want to open this up to, you know, the rest of the guys on the team right now. The problem is with like all these yen pairs, like, you know, especially like the pound yen, multiple failures at 168.60. Aussie yen, big failure, and we were trading below this 200-day moving average and the channel support. Aussie yen, or excuse me, Kiwi yen, big failure at resistance. You know, Canadian yen was already on its way lower. I mean, you know, the Canadian yen looks like it's going to reach lower for this 161% extension, but we were just doing a bearish consolidation in you know, the Canadian yen and all these yen pairs. I mean, we've been talking nothing but big time resistance, and you can see the basic technical analysis is, you know, bearish, because we were just doing a bearish consolidation below 101.50. I mean, it was all set up perfectly, almost universally across the board. The only outlier was maybe the euro yen. So anyway, I think the yen has been telling us this story for a while, and it just came to fruition, you know, a couple months earlier than we had anticipated. So Ryan, what other comments do you have about the BOJ here?
Tell them you love them today.
Yeah.
I mean, if you look at all
it
the
is the season, you know, every season of giving.
You saw my picture, didn't you? That I put up the first thing I put up today.
I did not
on Twitter. I'll put the link in the chat there. That was the picture there that I put up from.
He should have a cocktail in his hand.
Right? Yeah, he probably will by now.
Right.
But yeah, I mean, you know, Paul's just noted it in the comments. The dollar's looking like it's getting a bid on just now as the US opens up and wakes up. Maybe
well,
they're looking
at you got the yields ripping, right?
Yeah, maybe they're looking at the yields and thinking, oh, this is the same old yield dollar story. I don't think so. I mean, dollar yen's tried to rally up, got up 132, 89.90, and it's been hit again. I think rallies in dollar yen are going to get sold. That 133 area was a key point I was looking at as support when we were up above it. You got the fibs there, 133.29, 133 the figure. Lots of bits and pieces going on there, moving averages. It's broken on the way down. That is my area to look at on the way back up. So if we hit that 133s, high 132s and find it's resisting, that's going to keep sellers in the game for this break lower. And 131, low 131s, 25, 30-ish is the downside marker now for that.
Awesome.
But yeah, I can see there being maybe a bit of a rally back if the market, reads through it all and says, okay, well, they've done their YCC, but they're not doing anything else. But you know what the market's like when it gets a bone, and it's been trying this trade for many months now.
Yeah, it sure has. And look, you if you look around at all the yen pairs, they're all breaking down. I mean, it's going to be hard to see the dollar yen do anything more than a bearish consolidation. But
it's important for all the other pairs, because if you look at Aussie dollar, Aussie dollar cracked through my support area down at 66.60, got all the way down to 66.30s.
Oh, I mean, we're breaking. Yeah, it's
breaking again, but that's all Aussie yen. It's all down to the yen. So this is the time you got to think. What's the driver? Yen's driving a lot of the other pairs. So I'm long Aussie dollar. I'm not liking this move, but if it's purely knocked outside the fundamentals and the reasons for why Aussie dollar shouldn't go down, you've got to be thinking maybe this is a dip to buy, because you've got two different fundamental pictures at play, and maybe Aussie dollar is getting knocked out of sync with those fundamentals.
Yeah, right. That's and look, you got to look at the cross rate effect. You see like the Euro Aussie. I mean, this thing is ripping right now, absolutely flying. I mean, it was breaking out anyway. We talked about the breakout, and we talked about the next stop being at 160. I think we talked about that last night. Matter of fact, let me go to the Euro Aussie really quick. We had it's bullish. Next target is 61.25. So we're heading up there right now. And I mean, it's on its way, so you gotta be respectful of these moves. I mean, and plus we're at Christmas holiday on top of it. So no, we haven't heard from Stelios. So what's Stelios have to say about all this Bank of
Good
Japan
morning.
shenanigans? Good morning.
Merry Christmas from the BOJ, indeed.
Yeah.
What can I say? It's something that Ryan had mentioned of the possibility, and definitely bullish for the yen. We've seen that, and now with all these levels breaking, I think we should be buying dips in the yen. I think we're getting to a point now.
Wait, buying dips in the yen, meaning selling dollar yen.
Yeah, exactly.
Okay,
we want to be buying the yen as a currency. I think we're getting to a point where after quite a long time, there are once again kind of clear indications in terms of central bank tendencies. So you get the Fed and the ECB, which are still hawkish. You have the Bank of England, which is, I think, turning dovish. We have the BOJ's surprising to the hawkish side. Their actions basically causing the currency to appreciate. So I think these are trends which we shouldn't yet try to go against. So I think we should be buying dips in the yen, so selling rallies in dollar yen or sterling yen actually probably one of the best ones, and buying dips in the euro, and also potentially buying dips in the dollar. The dollar, I think, is going to reverse relatively early in 2023, but at the moment, I think this is a direction. That's what I will be doing anyway.
All right. Well, this is sad because this is the trade that I was talking to Chris Weston the other day, and doing like our trades of the 2023, and I'm like, I want to be long yen. I mean, I was long going into last night, but this is really going to be, I think, the trade of the year. We're probably going to see the dollar yen make it back down to the mid 20s. You're going to see, and unfortunately, it might all happen within the month of January. And then we're going to have to revisit why the hell we're doing it. But this is going to be a big move, and this is a big change from the Bank of Japan, and it's fast forwarding and happening a lot quicker than the market had anticipated. I don't think what the Bank of Japan is doing is any secret, and it's any mystery and any surprise. What's a surprise is this was supposed to happen 3 months from now. Right. So that's the surprise in everything. And everybody's like, holy, man, I'm trying to enjoy, a holiday. And you're right, Ryan. You have Kuroda giving us the Merry Christmas. Hope you guys remember me before I leave. Type of thing. So
Blake, you know what? Remember when dollar yen broke above 116, and for the whole duration of the move, people were trying to fade this move all the time.
Oh yeah,
selling. I think we're going to see the opposite now. We're seeing it already. I think people are going to say, yeah, no, I'm going to fade. This is going higher, and I think we're going to get to 124 pretty quickly. That's what I think.
I don't disagree. Go ahead, Ryan.
Sorry, mate. We shouldn't also forget we are in the year-end stuff. We can get a lot of funky stuff. This could shoot up to 138, 140 on something, nothing, and everyone will get caught out by it. So this time of year, we know what the Bank of Japan have done. We know what the market's likely to do with it moving forward. If you get any anomaly moves that push it outside that narrative, you know what to do with it.
Yeah. Paul said the dollar might go up looking at that RSI, Blake. Sorry. Well, look, I'm actually pretty bullish the dollar. So overall, and I have to say this, the dollar, and this is going to be exceptionally true for the next, I want to say, couple months now. At least December and going into January. What you do with the dollar and what you do with the dollar yen are two totally different things. I am a dollar bull right now, meaning I think that the euro is going to be seeing probably 102 to 90 cents. I made my case on the week ahead video this week. I was actually long dollars going into not dollar yen. I was long dollars, other dollars going into the weekend. And if you were in the ForexAnalytix room, I just scalped out of my long dollar US dollar Norwegian krona in 40 minutes. I'm targeting the dollar on the bullish side, but the dollar yen is a completely different animal. You can't treat the dollar yen like the rest of the dollar pairs. You have to treat the dollar yen like a yen pair. And so when you see the dollar and the yen work together, what happens is you see a crap ton of yen pair moves. When you get the dollar and the yen moving in the same direction, you have the euro yen, which ends up doing a 8% move to the downside in a month or two, right? So you have to look at the yen in a completely different lens than the rest of the dollar pairs. Segregated. Don't even think about it being in the same view. So anyway, very, very interesting. Thanks, Paul, for writing in. And like I said, nothing's changed in my mind from the week ahead video or any of my analysis. I'll continue to be buying dollar dips, not against the yen though. I was going to say, Ryan, going into
Ryan is actually gone, I think.
Oh, did he step out already? Oh,
yep. You were talking too much. That's why. Yeah, no, by the way, I agree with what you said. My preferred yen pair is the guppy, so sterling yen to the short side. So I want to be selling rallies in that.
I mean, look at the failure here.
Exactly, and look at we are at the it's a 50% retracement we're getting to, and it's also, if you scroll back, if you go out,
you can see it 50%.
From the hold on, I have it here, from the March 20 lows, so this is the COVID lows, to the previous highs, we're getting to the 23.6, which is at 160.76 or something like that. So that's another fib there. But if those break, that line,
it is the 24% retracement. Yeah,
and that blue line that you have there around 148 or whatever it is, I think that's the first target. So I like that pair a lot to the downside. But obviously, I'm not saying go in and short it now when it's down 3% on the day, but any rallies I want to be getting short. Yeah, but I agree with you. I think dollar, euro. I think with the central banks being on the hawkish side, I don't want to be short those, and I don't want to be long sterling. So, you take your pick.
Yeah. So yeah, same here. I look at that sterling yen, and boy, I tell you, that's pretty ugly. And you start looking around, and you start looking at all of these, the pound dollar, we get a move below that 200-day moving average, and we're going to probably be seeing the 50-day MA here, which is 117.80, 118 by the time we get there. That's 300 pip elevator shaft ride. And Dale, you know how it works, right?
Sometimes
up on an elevator, down on an escalator.
Oh, okay.
Oh wait, up on an escalator,
it's the other way
down on an elevator. That's right.
No,
something like that.
No, it goes like this. When you're going up the escalator in life, be kind to those going down. One day it might be you.
Wise words.
Yeah, there you go.
Wise words, but not exactly on the topic.
Wow, you're writing it down right now. Are people being nice to you? Huh? You were mean to all those people when you were going up.
Yeah, anyway. Steve.
Me?
Yeah. Yeah.
Yeah, Steve.
I doubt it, but okay.
Right.
Steve, how you doing? You have anything to say about the BOJ?
I'm not at all surprised. I am very surprised with the timing. I'm not surprised by the move. I've been saying for a long time now that, in my opinion, the BOJ policies is going to lead it to a disaster. I remember us having this conversation months ago, and that it's unsustainable. So I'm not surprised that they have to start reversing it, but I'm questioning what forced them to do such a thing in such a low liquidity environment. So that is what surprises me.
They like December surprises, Steve.
That's a great point, Steve. And I think a lot of it probably has to do with positioning, because they know, I mean, look, central banks, they can play the game too. And some of you guys have to also understand, central banks do trade, and they are really efficient because they're the ones in the room with the biggest and deepest pockets. You see, like, I remember during the financial crisis, one of the best trading central banks out there was the RBNZ at the time, the Norges Central Bank. And the Bank of Japan, they've been buying up all of this yen that everybody's been selling all year. And so, for them to do this and get everybody caught wrong-sided, why not? Because if you can reprice everything, like you can take every yen pair and reprice it 500 pips lower over the course of the next week or two, and you've got a large position in it, and you've been picking up all of this excess surplus around for this whole year. And remember, the Bank of Japan's been standing on the other side most of this year, why not stick it to the market when you can? And you know, low liquidity environment, everybody's playing the carry trade, everybody's playing short yen, you know, sell yen, long everything in the rest of the world. Why not stick it to them in a low liquidity environment, reprice everything much lower, and then take some? They're going to do it.
The BOJ should be very careful, because in my opinion, the time that the market is going to stick it to them is not that far away.
When's the first intervention? When did BOJ, hold on, just I'll Google search it since I normally can't. BOJ 2022 intervention. Let me give you the dates. I'm just did a Google search. October 24th, October. So basically the end of October, but I think there's more than that. Let me see. I think it was earlier, slightly earlier. All right. Well, let's just say that October, right here. This is where the BOJ is intervening. And by the way, I want to highlight the fact that every knucklehead on Twitter told you that intervention doesn't work. We had this conversation when the BOJ was intervening. I'm like, you got to be careful of you know, they're not effing around right now. They've been intervening all through here. Well, oh no, I know where it's all at. Well, let me just go ahead and rephrase.
First one was
started there.
Candle, yeah.
There you go. It started there, and all the way through here. So the BOJ has basically, let's just call it, their average price is somewhere around here, right? The BOJ just made 10% on whatever they were doing. Why not? And so, Steve, you ask, well, why do it during this illiquid time? Because you can really stick it to them. I was going to use all sorts of other 4-letter words, but I'm not going to right now. So, you know, I mean, why not? I mean, you know, you're sitting here fighting these people, the Goldmans of the world, you know, the JP Morgans of the world. You're sitting there on the other side of them on the bank desk going, what the you know, screw these guys. Let's do it now when they're all, you know, with their families.
By the way, I'm a big proponent of the fact that interventions do not work.
Yeah, you were one of them.
Yeah, absolutely.
Yeah. So go ahead and explain.
And I explained it multiple times. Interventions don't work if what you expect to do is just create some kind of a barrier against the market that's going to last forever. Interventions are very expensive and their effects are very short term, unless fundamental realities or other aspects of monetary policy change. So I will have to disagree with you that, because
this is one of the best intervention efforts I ever seen.
No.
RBNZ
It wasn't the first intervention was extremely failed, if you remember, because the price because the market
for the RBNZ.
No. I'm talking now about the.
I'm showing you on the chart one of the best interventions I've ever seen.
Yeah, first time the BOJ intervened, the effects of the intervention lasted less than a week, and then the second intervention worked because it was accompanied by the dollar topping for different reasons, right? So that alleviated some of the pressure in the USD yen. Now, the fact that the BOJ is actually now changing practically its monetary policy and is pointing in a different direction, they blinked, but in a different direction than people expected other central banks to blink. Is a
guys,
proof,
by the way, we have housing data and Canadian retail sales data in 30 seconds.
Thank you. Let me
proof
pull
that
up.
interventions don't work.
Steve,
because
I so disagree with you, and I
it's
just
okay,
disagree
mate.
with you.
It's
And
okay.
you know what?
Because
and
if interventions on their own worked,
Steve, we got data coming out, buddy.
then the BOJ had
Steve,
no reason
I know you
to
want
change
to get the
its
last
monetary
word in,
policy.
but you want to get the last. God damn it!
I don't want to get the last word in, mate. I was speaking and you interrupted me.
No,
it's not that
because we got data coming out. We got to pay attention to the data. You can finish your conversation.
Canadian retail sales roughly in line. Core is better. Retail sales slightly worse. Nothing. Building permits have. Yeah, it's all in line. So false alarm.
Yeah, you were interrupted for nothing, Steve.
All right, so Steve, go ahead, finish your conversation here, and I will, but I'm going to tell you that I just disagree with you, but we don't have enough time to have this conversation because
that's okay.
Yeah, because and look, they were intervening when everybody was changing their monetary policy. How about if they know what they're doing?
If intervention on their if intervention alone worked, BOJ had no reason to do what it did just now. Because if intervention on its own was enough, then why did they end up changing the monetary policy, which they just did?
Because they knew they were going to eventually have to, because inflation is starting to.
I agree with you. That's my point. So interventions is not the solution. It is a temporary solution, but it's not a permanent solution. The permanent solution is fixing problematic monetary policy. Now, did they fix it by doing what they did just now? No, but they made the first step in the right direction, which is what? Reversing this completely lunacy of a monetary policy they have. Now, I don't know how far they're going to end up going. It remains to be seen.
Well, I'll tell you what, they just made a shit ton of money. And
okay, that's it. This is what we call in economics spillover benefits.
Yeah, and they just had a windfall, and so they're all celebrating. They're gonna have the BOJ is gonna have a hell of a Christmas party this year. That's for sure. This is actually probably a real photo. Hey, Dale. Dale, have a great interview. Everybody, thanks for hanging out with us today. And remember, if you're in the ForexAnalytix community, we will be doing the morning edge in about 45 minutes. And want to let you know, if you want to get involved in our community, you can try out ForexAnalytix for $1, or you can check out the trader funding program, learn how to trade our money. Because when you trade our money, we want you in our community for at least when you're starting out, so you have trade ideas and things to think about. So treat yourself to a Christmas gift this year, or holiday gift if you don't celebrate Christmas, and check out the trader funding program and learn how to trade our money and not risk your own money, because you don't take any of the risk and you keep 75% of the returns. Click that video to watch a little bit more. I'll put the link in the description, or the link in the chat box. Dale, have a great interview.
Okay, I will tomorrow, because today's guest canceled.
Oh,
so everybody have a great day. You could join the team in 45 minutes.
I'm sorry, Dale. Can I say one last thing? If you guys, if you guys are, since you might be itching for some sort of interview. I just interviewed Mark Chandler, and we were talking about the BOJ. I interviewed him last night. Also I'll be interviewing Tavi Costa today, and also Mark Yusko. Those interviews will be on tradersummit.net. And if you guys haven't listened to Nick, this is Stelios, really enjoyed this one. Didn't you, Stel? Nick Giovanovich.
Yes. I really like him. He's aggressive sometimes, but there's a wealth of knowledge. I mean, this guy, the experience he has, incredible. Yeah,
he's an ex hedge fund manager. You guys should listen to this one. He thinks the Fed is actually done raising rates. Really interesting interview. An interesting man too. I've chatted with him a lot over the years via Twitter. So anyway, well, Dale, I'm going to pass it over to you then. Sorry about that. I just wanted to interrupt you real quick.
Everyone have a good day. See you tomorrow.